A number of high tax states are trying to figure out ways to get around the loss of the SALT deduction for federal tax purposes. I know that Governor Cuomo plans to fight the new tax law legally. Will that work, Guru? Is there anything states can really do to get around what is going to be really harmful for a lot of people, including our very own state of New Jersey?
To begin with Governor Cuomo in New York, this litigation that he has commenced, which, by the way, Connecticut and New Jersey have joined in on, I don't believe is going to work. I think we're just wasting more taxpayer dollars. And the reason for that is Congress has the power to tax. So in an extreme example, King, if Congress decided that they were going to implement 100% income tax, they can do that. Now, of course, there'd be a revolution, but they have the power to tax. So litigate, just because various states, and not all states, by the way, just the high tax states, which there's probably about 10 of them, don't like it, doesn't mean that the courts are going to rule that Congress can't tax that way. They can. So two pieces of this SALT puzzle is the $10,000 limit on the state and local taxes, which is broken down into two pieces, the real estate taxes and income taxes. So with real estate taxes, California, which is basically the highest tax state, is setting up charitable trusts. So instead of people making pure real estate tax payments or property tax payments, they would be making a charitable donation. And the reason for that is that the charitable deductions are not subject to the strict limitation that the property taxes are. So that's an interesting play. There's actually some towns in New Jersey that are implementing it on their own. I'm not so sure that's going to work. That's something that the IRS is going to challenge, but we'll see if they're able to get that one through. Now, on the income tax side, King, New York is looking at doing something that's actually very interesting and I think could have a shot at actually working. So what New York is contemplating right now is eliminating the income tax on employees and shifting it over all to the employer. And the reason for that is because employers still can deduct state income taxes for federal tax purposes. So what would happen is you would have employers adjusting compensation to make up for that state income tax. So what it would do is it would give the employee the same net benefit as getting the federal deduction for the state income tax. It would allow employers to lower compensation in order for them to net out, so you get to a net zero between the employee and the employer, and therefore it's a backdoor way, which I think can work, to allow individuals to still be able to take their state and local income tax deductions.